Thank you, Mr. Chairman, Ms. Alehi, and Mr. Toomey. Welcome to both of you and your families. I commend you both for your commitment to public service and your willingness to serve in these important roles to which you have been nominated. Mr. Toomey, if confirmed, you'll have a challenging job. The GSEs led us into the 2008 financial crisis through their excessive risk-taking, and Congress established FHFA as a tough regulator to ensure that that would never happen again. But instead of being the cop on the beat, the Biden administration seems intent on turning FHFA into a co-conspirator with the GSEs. FHFA has taken a number of troubling steps to extend credit to risky borrowers and undermine the GSE's financial condition. It has proposed reductions in the GSE's capital requirements. It's lowered guarantee fees and has said it is considering further cuts. It's suspended restrictions on the GSE's risk layering and acquisition of investor and second home loans. It's relaxed the GSE's underwriting requirements, and it's replaced much of the FHFA senior leadership. Meanwhile, housing prices, of course, have skyrocketed, an astonishing 18.5% in just the last 12 months. So I think it's a question of when, not if, these good times for the housing market come to an end, and I worry that FHFA's enabling of risky lending, together with the administration's total disinterest in recapitalizing the GSEs through outside private capital, has placed the GSEs on a path that could well lead to another round of taxpayer bailouts. Mr. Toomey, if that were not already enough, your job will be made more challenging by an administration that has no discernible housing policy besides giving mortgages to as many borrowers as possible with little regard to their ability to repay. Housing is expensive in part because our housing policies subsidize demand while ignoring supply constraints. Our Democrat colleagues' reckless tax and spend bill makes little effort to increase housing supply. The Senator Schumer earmark, or the Schumark as I call it, as discussed on the October 21st hearing, would spend up to $40 billion renovating New York City's existing public housing. Much of the other housing funds would go to imprudent down payment assistance and rental vouchers that add further to housing demand. The bill even creates an astonishing invitation to mortgage fraud by making $15 billion available to borrowers who sign an attestation, truthfully or not, that they are, quote, first-generation homebuyers, end quote. Amazingly, you can qualify so long as your parents do not currently own a home and you have not owned a home in the last 3 years. So much for first-generation homebuyer. We need to try something different than the same housing policies that caused the 2008 financial crisis. To that end, in March, I proposed principles to guide housing finance reform discussions. The administration, however, has shown no interest in real reform and even missed a September 30th deadline to report on its plan. Mr. Toomey, given the path the administration has put on us, I suspect you might soon be investigating how we eagerly double down on 50 years of failed housing policy and thereby predictably led the GSE into what could be another round of taxpayer bailouts. Now, turning to Ex-Im, Ex-Im claims that it only takes risks that private lenders are unable or unwilling to take. But we should stop right there and ask ourselves, if private lenders are unwilling or unable to take a risk, why should taxpayers be forced to take that risk? But yet, at the same time, Ex-Im also claims it only makes safe bets. But it's obviously impossible to do both. Ex-Im can't only take transactions so risky that no one else will do them, and at the same time, only be doing safe transactions. The fact is, Ex-Im wins business by systematically underpricing the risk it takes. That's why borrowers go to Ex-Im instead of any number of private lenders that will not offer deals on the same terms as Ex-Im will. That's why our largest banks go to Ex-Im for loan guarantees. The Ex-Im terms are too good to be true, at least in the private sector. And it's important to note that the vast majority of American exports get done without Ex-Im support. We've reviewed annual export data from 2007 through 2020. In that period, the highest percent of U.S. exports using Ex-Im financing was in 2012, and it was 2.3%. And that was when Ex-Im had everything going for it. It was fully operational, it had a quorum on its board, it had not reached its lending limit. The reality is, we're the world's second largest exporter of goods behind only China. We lead the world in value-added exports, and we do it almost entirely without Ex-Im financing. Not only is Ex-Im financing generally not needed, but it's often nothing more than crony capitalism providing taxpayer-financed subsidies to some of the world's largest companies who have plenty of access to private capital. Exim's recent deal guaranteeing an $82 million loan from J.P. Morgan to Qantas for the purpose of buying jet engines from GE is just a recent example. Generally, the same giant lenders, exporters, and foreign companies, often state-owned, benefit from Exim, while taxpayers take the risk. There's also a history of waste, fraud, and abuse at Exim. Exim's IGs have identified numerous concerning practices at the bank over the years. If confirmed, Ms. Salehi will have an important responsibility to serve as an independent watchdog. Mr. Chairman, I look forward to hearing from today's nominees.
Thank you, Senator Toomey. Would the witnesses please rise, raise your right hand?